Hey, stocks close up 1% again this week. This is Mark the Meerkat in for D7 with the Grok weekend review of the stock market. Good through February the 3rd, 2019. All right, here we are. What was it like on Friday? Let's pull back. Look what happened this week. And let's pull back because the end of the month occurred this week. So let's take a look at the month of January as well. So let's look for the numbers on Friday. It was a mixed market on Friday. The SPY just up just a hair. We had the Dow up 0.1%, and we got the NASDAQ was pulled back just 0.4%. Was still up over 1% for the week, and the small cap Russells were up about 0.08. Again, just marginal there. Bank though, however, was up 0.8, leading all the markets up. That's a little bit more bullish, and that VIX had pulled back. That fear indicator pulled back to close at 16.14. We'll take a look at that. That's a low as it's broken down the major area of support for that VIX fear indicator. So fear is coming out of the markets. That's right. So let's take a look here at the S&P 500 on the daily chart. And sure enough, we did a bull pullback here this week, and we're up here. But look where we're at. We're at a couple of major lines of resistance here. First of all, last week Des had talked about this major line up here. We did break through it, and we're above the 50% retracement. But now we're right at the 0.618%. The 61.8% retracement on the Fibonacci's possible line of resistance, and the 100 moving average possible line of resistance here. So we have two major lines of resistance here on the S&P 500, and we are overextended a bit here, but after that pullback. So one of the major news here, the major news of this past week was the Fed. Not that they did not raise interest rates in January, however, they have now turned very what we call doveish, in that they're now believing that maybe future increases are not going to be as nearly as frequent, and we might even be at the end of the increases right now. We're into the neutral zone. So that had a major impact on the markets on Wednesday when that information came out, as well as most of the FANG stocks also reported this week, and we'll go and look at those charts and see what happened as a result of that. And we have Google coming up this coming week, as well with a lot of other stocks that are going to be reporting this next week. We're right in the middle of the earnings parade. So this is the daily chart in that Fibonacci. So let's go ahead and pull back and take a look here at the weekly chart on the S&P 500. And again, it's right up to the same area here on the fib, because it's the same for both the weekly and the daily. So let me go ahead and get rid of this. And now, and last week, Des had talked about the fact that it was basing up here, and almost a tweezer top. And you know what? This purple line in here, that was the closing line from 2017. It just happened. It was hitting its head right in that area. Isn't that interesting? That was a leftover line. This red line is the opening line, the closing line, I'm sorry, from 2018, and then this green line up here is the all-time highs. So we have traced it back just about 61.8% of the way back up here. Possible line of resistance here. But a nice green day. Now for the S&P, that makes 5 out of the last 6 candles were green, and to the upside here. So we, not a perfect record there, but the Dow is a little bit different. Now a couple of other things there. Des talked about the MACD here. The MACD was just below the zero line, and it had negative ticks. We'll look at it now. It now has a positive tick to the upside on the histogram, and it's now above the zero line as we continue upward here. So those lines of possible maybe turning around here point, we have now broken through that, and part of it's generated by news, and part of it is, again, the fear coming out of the markets. So that's the S&P on the weekly chart. Let's take a look at it on the monthly chart. And now, we gotta get rid of this again here, and come on, let me get rid of it. There we go, and let's get this out of the way. And sure enough, we had this huge candle down in December, and January is now closed. Last week we were concerned because it only come back 50% of the way of that candle. It is now broken above that area, so that is not as bearish as it was. Again, the 50 it retraced all the way back up above that area now, and because this is just a little doji because there's only 1 day of trading on Friday in February so far. So look at that nice recovery back more than halfway. That is more of a bullish sign than it is a bearish sign on the monthly chart. So we are recovering from this downfall. So far we are, and if we're going to go basing sideways for a couple of months or go higher, we'll have to wait and see. All right, let's go to the back to our daily charts, and we're going to go to the Dow real quick here on the daily. And the Dow is also, it is just above the 61 point. Here's 61.8, just below that 200 moving average, big red on the daily chart. And this was the major resistance line here. And this week it hit it twice, could not exceed it. And the 200 moving average on Friday, it's just barely above it, but it's it's in that area there, around 250.50 on the DIA. So it's basing up here at major lines of resistance. This whole area is a major line of resistance. Again, a lot of earnings of those in the Dow this past week. It's causing some good news and some bad news. So it's a tug of war there. There's no straight answer about that. All right, let's go to the Qs here. This is the NASDAQ, right? And as we talked last week, this is the daily chart. Last week here, it went up and hit its head right here on the on this resistance line, and then this week on Monday it hit it and then pulled back and then took off again. It's all about earnings. And again, the FANG stocks reported, some good, some not so good. We'll take a look at those, and right to the 100 moving average here, but the 68.1 resistance is up here, but it is above the 50%, which was here, where it hit resistance here on the 50%, and here and here. It wasn't until Thursday that it actually broke above the 50% retracement on the Fibonacci. So that was a possible line of support and resistance there. Let's go ahead and get that out and take a look at the weekly on that. I need to remove. There we go. So take a look in here at the weekly on the NASDAQ. And there we go, QQQs, and it is 1, 2, 3, 4, 5, just barely last week. 6, it is up 6 in a row. No, it isn't. I take that back. It was also 5 out of 6 here on up candles, where again approaching up here. No, that's not the all-time highs. That's in the wrong spot there. Oops, sorry about that. There we are. The all-time high close is back here in August. But it's lagging a little bit. It's closer to the 50% area rather than the 61 as far as the other markets are concerned on the weekly chart. Taking a look at it on the monthly chart. Again, we just closed for the month here. Let's take a look here at the Qs here on that, and you can see it came back more than 50% of the way up here now. So again, that is more bullish than it is bearish on the monthly. So let's go back to the daily charts and take a look at our small cap Russells here, and they too are just lagging a little bit as far as its retracement here. So here on the Russells, it fell all the way to here, working its way back up, and now it did break above this resistance line here that we had because we had a new swing high there. And look at that. Des just talked about it last week, but it broke out and it came back right to that line, now used it as support, then rolled right back up here. And it's right, and where did it stop? I mean, literally, it tagged it right there. Let me stretch it out. Can you see that the 50% retracement? It tagged it on Friday and then pulled out just back under it there. This is in the small cap Russells. So the smaller caps here have retraced, but right to the 50% level and are now stalling right there. So is this a possible time for it to turn back down, or could it base here for a while, or take off? That's what we have to be looking at. Again, and this is right to a possible area where we were concerned last week in several of the other markets. They busted through those areas, and now they're the 61.8, while here in the small cap Russell, it's hanging just under the 50%. So the Russell and the NASDAQ have pulled back, but not quite as much as the Dow and the S&P 500. Let's take a look here at the bank. And bank here on the daily chart, it too has retraced back up right just under the 50%. We can't go anywhere without banks, so we always want to pay attention to the bank index, which is an index of over 470 regional banks, not just the big boys and too big to fail. I mean, too big to jail, which is it? I don't know. The really big banks. It's a collection of all those, so we can't go anywhere sustained without it. So it's come up here right to the 50% retracement as well. Let's see where we go this next week here. Now, I told you I would talk about the VIX, and here is the VIX on the daily chart, and we were just screaming high here all through December. We were way 20. This red line here, if it's up above that, that is screaming volatility in the markets. That's where we were getting those. On the Dow, we were getting those 300-400 point swings every day, up, down, and all around. And then pulled back here, but then it started to bounce back up again to the 20 area. But now the Fed has said, hey, we're not going to be. It looks like we're not going to be increasing interest rates as frequently or even soon. And look at that; it dropped right below that 200 moving average on that. Well, you say, well, that doesn't seem to be very significant. Well, if you look at it, right here, it tagged it, right? Oops, right here. All right, that's not working there. So right here, it tagged it. Right over here, it tagged it. So it's tagged it, and then it was basing here at 18. It's now dropped down here below, near the below the 200 moving average, at just above 16. Yeah, we get down to 15, and we're almost in the complacent range. Below 15 here, it is complacent, where people's fear is not there. They're not out worried that the markets are going to suddenly crash. So, from a psychological standpoint, the market is calmer than it has been, and the fear is starting to come out now. So some of the uncertainties about what the Fed was going to do, about the China, now that we're looking to plan a meeting with China on trade, so some of that geopolitical news is starting to come out of the markets, and we now have the government back working again. It's another uncertainty there. So those are just some of the uncertainties in the market. So where are we at in the markets? Well, we are continuing this bullish run, and we were at some areas of major resistance, either the 61.8% of Fibonacci for the S&P and the Dow, and for the NASDAQ and the small cap Russells, it's around the 50%. And that's okay. They're just possible lines of support and resistance, along with these major areas they've now come back up into where they were basing there in December or in October, November, that we're basing in November. Okay, so let's take a look at the FANG stocks here. Facebook reported this past week, and Des had put a buy on that just last week. And sure enough, look at what happened on earnings. Again, we don't want you to trade over earnings. That's very reckless. But, boom. I mean, they came back, even with all the privacy issues, problems they've been having, they came back very, very strong here. And then where did it jump to? Look at that, right to the 200 moving average. It pierced it and then closed right at the 200 moving average. And then on Friday, a Dragonfly Doji here, Gravestone Doji here, just right, stay below it. So that's interesting. These lines can make a difference. Apple, it also reported this week, and if you remember last week, Des, it said, hey, it was in a bear flag, which is a bearish formation. Careful, but again, earnings were coming out. Boom, they did break out here. Now it's been stuck in this range here, 160 plus or minus $10 here for quite a while after its downfall here. So that was a nice breakout here above the 50 moving average, and is now basing here above 165. So we'll see if it bases for a while and it takes off again, or what. But again, they said actually they didn't say they were positive earnings. They just said they weren't as negative as they thought they would be. So again, it's not about the news, folks. It's about the market's reaction to the news. That's Meerkat Trading Rule number 10. All right, so we got Amazon here, and it is also had earnings, and it built up into earnings, and actually, when they got the earnings, crashed back down. Well, they said, well, they're going to be starting investing in infrastructure and everything else to expand. Well, the market didn't like that. Oh well. So it pulled back. It's been in this really tight range here, as you can see, around around this 1640 line here. It's been an area. It's been of consolidation with a couple of dips in there. So again, earnings, not a huge impact on that. Netflix, also had earnings, and last week it was it was 2 weeks ago, not last week, and Des had put a buy on it right here, and sure enough, it is sustaining itself right around what, that 200 moving average again. That's almost 1 full year's worth of data on that line. So people are paying attention to that. It's just floating around here right now. And then Google, who reports this week, Des put a buy on it last week, and it popped up. And so in anticipation of earnings, where did it stop? At the 200 moving average. And isn't that interesting how the FANG stocks, these are the largest cap technical stock, they're the largest cap stocks on the NASDAQ, and almost in all of the market there. So we've got they're all acting very similarly, that they're hanging around their 200 moving averages. Now again, we don't suggest trading over earnings because it's a known event with an unknown outcome. So again, be cautious there. We do currently have a buy on it, but again, you need to protect your positions. And stops do not work in post-market and pre-market, so they will not protect you on a major gap up or gap down, either for you or against you, right? So 50-50, I don't like those odds at all. I'd much rather trade when the odds are in my favor. Well, that's it for this week. Again, Des is down at the Super Bowl, so he asked me to cover for him this week. I know it's not as complete as he normally does. Hey, I just want to remind you of something that Jack from West Virginia said in my day trading chat room. And you think about this. He said, if you shift your mind from predictability to probabilities, you will increase your profitability. This is Mark the Meerkat. Have a great trading week and trade well.